Aman?
Sir, we are going YouTube live in 1 minute.
Okay, okay.
Sir, we can start, sir.
Okay, thank you, Aman. Good evening, everyone. Welcome to the 9th session on GST Back to Basics. Since last two sessions, we are discussing provisions of input tax credit under GST. My partners Parsha and Darshan Ranawat discussed various provisions of GST, whereby they explained various conditions prescribed in the sections and rules to avail input tax credit. Today is the third and last session on the topic of input tax credit. And the topic which we are going to discuss today is blocked credits under GST. And primarily our today's discussion will be focused on section 17(5) of CGST Act 2017. So as I highlighted earlier that we have already had two sessions on input tax credit, whereby we have already discussed various conditions which a recipient of supply is required to fulfill in order to avail input tax credit. The last condition which is pending for discussion and which we are going to discuss today is block credit, and section 17(5) of CGST Act 2017 takes care of this particular provision. Now, before going to each of the clauses or each of the transactions or activities which are blocked and prescribed in section 17(5), first I would like to spend some time discussing on the opening paragraph of section 17(5). And as you can see from the header of this slide, it is mentioned non-obstante clause. Now, what do you mean by this? So let's start reading the opening paragraph of this particular subsection, section 17, subsection 5. It reads as, notwithstanding anything contained in subsection 1 of section 16 and subsection 1 of section 18, input tax credit shall not be available in respect of the following, namely. Now, three terms, as you can see, I've highlighted in bold and I have underlined them. Now, these three terms are very important to understand before we really go into each of the subclauses in this particular section. Now, what is the importance and what is the relevance of these three particular terms? Let us try to understand, and let us spend couple of minutes in understanding these three terms. The first one being notwithstanding. Now, what do you mean by this, and what is the relevance of this term notwithstanding? So as I mentioned, as it's mentioned in the header of this particular slide, non-obstante clause. So this thereby means that whenever any section starts with notwithstanding, it means that it is a non-obstante clause. Basically, what do you mean by that? It means that it overrides the conditions which are prescribed in any other sections of this particular law. And as you can read over here, it's saying notwithstanding anything contained in subsection 1 of section 16 and subsection 1 of section 18. So this particular section, section 17(5), overrides section 16(1) and section 18(1) of CGST Act 2017. What this thereby means is that even though any of the items or activities which are prescribed in section 17(5), even if they are used in the course or furtherance of business of the company, despite of that, you might not be entitled to claim the credit if it is prescribed in section 17(5). Because someone might just come and say that I have availed rent-a-cab services which is used in the course or furtherance of my business, I have satisfied all the other conditions required to be fulfilled for availing ITC, the conditions which are prescribed in section 16, section 18. Despite of that, why am I not allowed to claim ITC of rent-a-cab service? So because this section 17.5 starts with notwithstanding anything, so this subsection overrides your section 16 and section 18. And because rent-a-cab is also specified in section 17.5, even though the services are used in the course or furtherance of business, you will not be entitled to claim ITC because this section starts with notwithstanding. Let us try to understand relevance of the other term, which is in respect of. Now, what do you mean by in respect of? The meaning of this term in respect of is that this particular subsection has to be read in a restrictive and in a direct manner. So we have got references from one Supreme Court ruling and one from House of Lords, which is basically England's Supreme Court. So in Swastik Tobacco Factory, which is the Indian Supreme Court ruling, the Supreme Court has observed that in respect of has to be read as on, which narrows down the scope of the restriction only in a direct manner to the items listed under the said section. So this thereby means is that you have to strictly read the activities or transactions which are mentioned in this particular subsection, and you cannot stretch it beyond the intention or beyond the imagination with which this particular subsection has been drafted. The House of Lords, the England Supreme Court, in the case of Asher versus Seaford Courts Estate Limited, has analyzed the term in respect of as, and they have observed that the term in respect of must be read as equivalent to attributable. So this particular term in respect of restricts the manner in which this particular section has to be read. The last term which requires deliberation is the term namely. And what do you mean by namely? So by the term namely, it means that this is the exhaustive list. Whatever clauses which are prescribed in section 17.5 is an exhaustive list, and you are not supposed to read block credit beyond this list which is given in section 17.5. So we again have got observations of Supreme Court from two rulings. One is from Mahindra Engineering and Chemical Products Limited, whereby Supreme Court has observed that use of expressions namely followed by description of goods is usually exhaustive unless there are strong indications to the contrary. And in the case of Sri Durga Distributors, the term namely followed by description of goods was held to be exhaustive in nature. So with this background, the opening paragraph of section 17.5, which is the subsection of block credits, now we will start analyzing each of the clauses which are there in this particular section. Before going into that, let us first quickly analyze as to when a recipient of service is required to check the provisions of section 17.5. Whether the provisions of block credit are to be checked at the time of availment of credit, or subsequently also whenever the use of the product or services is changing, at that point in time also again these provisions are to be referred. So in our view, provisions of block credit, provisions of section 17.5 are strictly to be reviewed or interpreted only at the time of availment of credit. Only when I'm availing the credit, I need to analyze whether it is blocked under section 17.5 or not. Once I have availed the credit and subsequently say after 2 years or 3 years down the line, if the use case of that product is changing, then again I am not required to revisit these provisions 2 years down the line. So strictly these provisions are to be reviewed, are to be interpreted only at the time of availment of credit. So I have taken an example that, say for example, a proprietor purchases a water purifier for office use, which was expensed out in his books of accounts, and ITC was claimed by him. Now this, because this expense is for business and other, and assuming that other conditions of section 1618 are getting satisfied, he has availed the credit. Now after 2 years it was gifted to one of his suppliers. Now section 17.5h clause h we have, which we'll be discussing in detail in a couple of minutes, but we have one clause h which says that ITC in relation to gift has is a block credit. Now going back to this example, when this proprietor is giving it as gift after 2 years, is he required to review the position of ITC which he had claimed 2 years back? The answer is no, because the provisions of section 17.5 are to be checked only at the time of availment of credit for the first time. The subsequent change in usage of the product does not mean that you are again supposed to review the provisions of section 17.5h. And when we'll go to the each of the clauses of section 17.5, you will realize that there are mixed cases whereby some transactions are object driven, some transactions on which ITC is blocked is object driven. For example, gift, beauty treatment, health services, etc. These are block credits and these are object driven. And we have some transactions or activities which are usage driven. For example, ITC on food and beverages, personal consumption, etc. is blocked. So this thereby means that basis usage also certain transactions are blocked from ITC. And the last aspect which we need to analyze is what are the implications on change in position. The answer is there cannot be any interest implications, because we have already concluded that the provisions of block credit are to be analyzed only at the time of availment, and therefore subsequent change of usage does not mean that you are supposed to reverse the credit or you are required to pay interest on it. Some reference to the judiciary. We have two judgments. One is from Delhi Tribunal in the case of Surya Roshni Limited, whereby the tribunal has observed that credit entitlement has to be decided at the time goods are received by the manufacturer. Subsequent change in the use of goods becoming accessible not to redetermine the question of admissibility of credit. We have one more observation of Delhi Tribunal in the case of Brindavan Beverages Private Limited, whereby the tribunal has observed that credit eligibility is not based on capability, but based on use in the manufacture of dutiable goods. These conditions are to be fulfilled at the time of receipt of capital goods. Subsequent developments cannot influence the eligibility. So the position which I just mentioned is supported by this particular rulings of Delhi Tribunal. Now with this background, we'll analyze each of the clauses of section 17.5. The first one being clause A, which is in relation to motor vehicles. Now what this particular clause says is that ITC in relation to motor vehicle, if it is used for transportation of persons and if approved sitting capacity of the vehicle is less than 13 persons, including driver, then ITC is blocked. I'll repeat again. Motor vehicle, if used for transportation of persons and if approved sitting capacity of the motor vehicle is less than 13 persons, including the driver, then ITC is blocked. However, we have three exceptions to this particular clause. The first one being that if this particular motor vehicle is further supplied as it is, then ITC will not be blocked. If this motor vehicle is used for making further taxable supply of transportation of passengers, then ITC will not be blocked. And if this motor vehicle is used for making further taxable supply of imparting training on driving such motor vehicles, then ITC will not be blocked. So three exceptions: further supply of motor vehicle, taxable supply of transportation of passengers, and taxable supply of imparting training on driving such motor vehicles. With this, we will take some examples related to this particular clause and we will try to understand in what cases ITC will be available and in what cases ITC is blocked. The first one is motor vehicle having sitting capacity of 5 passengers purchased by proprietor for business travel purpose. Now, because the sitting capacity of this vehicle is less than 13, even though it is used for business travel, but because this is not for further taxable supply of transportation of passengers, ITC will be locked. The second example is motor car purchased by company to be given to their employees for business travel. Again, two conditions we need to check: whether it is having sitting capacity less than 13. Yes, we'll assume that in this case it is having sitting capacity of less than 13. Second, is it used for further taxable supply of transportation of passengers? No, it is used by employees for their business travel. Therefore, it will again be a block credit. Third example, motor car purchased by company for computation of employees from or to office till nearest railway stations. Again, both these conditions are not getting satisfied in this particular case and ITC will be blocked. Fourth one, minibus which is having sitting capacity of 30 purchased by a company for commutation of employees from and to office till nearest railway station. Now in this case, the condition of sitting capacity being less than 13 is not getting satisfied and therefore ITC will not be blocked. ITC can be claimed for purchase of minibus which is having approved sitting capacity of more than 13 passengers. Fifth example, commercial minivan purchased by company for transportation of goods. ITC will be very much allowed because as we saw that ITC is blocked in relation to only in relation to motor vehicles which are used for transportation of passengers. This being a motor vehicle for transportation of goods, ITC is not blocked. Last example, motor car purchased by company for CEOs and other full-time directors. Answer will be no, because it is not satisfying the two conditions which we have discussed. With this background, we will go to the next subclause. Apart from this, if participants have more examples or more queries to discuss, then we'll have a Q&A session in the end whereby you can ask your questions or you can ask your doubts. We'll open the session for discussion in the end. We'll go to the next clause, which is clause AA, and this deals with ITC in relation to vessels and aircrafts. Now, what this particular clause says is that if you have purchased vessel or aircraft and then ITC is blocked. However, there are two exceptions to it. One exception is that if this vessel or aircraft is used for further taxable supply of transportation of passengers, then ITC will be allowed. Or if it is used for further supply for training how to operate this, how to fly the aircraft or how to navigate the vessel, then ITC will be allowed. Otherwise, ITC will not be allowed. And the second exception is that if the vessel or aircraft is used for transportation of goods, then ITC will be allowed. Apart from these three exceptions, ITC is not allowed on purchase of vessels or aircrafts. With this background, let us try to understand with the help of few examples. First example being vessel purchased for transportation of employees from shore to rig. In this case, ITC will not be allowed. Let me just take you back again to this particular slide. What it says is that further, if a vessel or aircraft is used for further taxable supply of transportation of passengers, then ITC will be allowed. Now, in this example which we are discussing, it is not used for further taxable supply. What I thereby mean is that if I have a vessel and if I am giving it to my client for transportation of their passengers, and if I am charging charging rental to them, and if I'm paying GST on them, then ITC will not be blocked. But in this particular example which we are discussing, the vessel I have purchased for transportation of my own employees. Thereby, I am not resulting into having a further taxable supply, and therefore ITC will be locked. The next example is vessel purchased for transportation of passengers from shore to rig of client's employees on billing basis. So in this example, I have purchased a vessel. I am giving it on rental to my client, and my client is using it for transportation of their employees. Now, in this case, ITC will be allowed because I am using my vessel for further taxable supply of transportation of passengers. The next is vessel purchase for transportation of own goods. Now, going back to this slide, if you will see over here in the second exception, there is no requirement of further taxable supply. You will see that vessels and aircraft transportation of goods is the exception. So for transportation of goods, there is no requirement that it should be for further taxable supply of transportation of goods. And therefore, even if I am using a vessel for transportation of my own goods, ITC will be allowed. Vessel purchase for transportation of client's goods. Again, in this particular case, because of the exceptions, ITC can be claimed by me. With this background, we'll go to the next clause. Next clause is clause AB, which deals with insurance, servicing, repairs, and maintenance of motor vehicles, vessels, and aircraft. So in this clause, three types of expenses: general insurance, services, servicing, and repairs and maintenance for motor vehicles, vessels, and aircraft is a block credit. However, they have given three exceptions to this particular block credit. The first exception is that when a motor vehicle, vessel, or aircraft is used for the purposes specified therein. The exceptions which we saw for clause A and clause AB, whereby if it is used for further taxable supply of transportation of passengers, if it is used for transportation of goods, if those exceptions are getting satisfied, then in that case, even ITC of general insurance, servicing, or repairs and maintenance will be available. Second exception is when received by a taxable person engaged in manufacture of such motor vehicles, vessels, or aircraft. So the manufacturer of vessels, motor vehicles, and aircraft can claim ITC of general insurance, servicing, and repairs and maintenance of this particular vehicles. The last exception is when received by a taxable person engaged in supply of general insurance services in respect of motor vehicles, vessels, or aircraft insured by him. So an insurance company who is insuring a motor vehicle or vessel or an aircraft, he can claim ITC of the insurance expense if he is further giving it as a sub-insurance thing. So these are the exceptions. With this background, we'll try to understand it with the help of few examples. The first example is car insurance purchased by company used by director of the company for business purposes. Now again, this is not getting fitted. This is not fitting in any of the exceptions which we just discussed, and therefore ITC will not be available. Servicing cost incurred for motor vehicle which was purchased by proprietor for his own use. Again, ITC will not be available because it is not satisfying any of the exceptions. Third is repairs and maintenance cost of truck incurred by a transporter who has opted for GST at the rate of 5% to be paid by the recipient. So we all know that a GTA has an option. Either he pays tax at the rate of 12%. So 12%, and he can claim all the input tax credit which is for the goods and services which he is availing in the course of business. Or if he is choosing for 5% under RCM, 5% to be paid by his customer, then he is not entitled to claim any credit. So in this particular case, because the transporter is not entitled to claim credit, again, even though the motor vehicle is used for transportation of goods, ITC of repairs and maintenance cost will not be eligible to him because the rate entry does not permit him to claim any kind of ITC. The fourth example is repairs and maintenance cost of truck incurred by a transporter who has opted for GST at the rate of 12% to be paid under forward charge mechanism by him. In this case, ITC will be available to him. The last example, this example is very important. Tires of motor car purchased by a company for the car given to director for business use. Now let me again go back to the slide and tell you that ITC is blocked only for these three items. First one being general insurance, second being servicing, third one being repairs and maintenance. Now, if you will see, all these three transactions are in the nature of service. And the example which we are discussing about is the tire. Tire is not a service, tire is definitely goods, and therefore ITC is not blocked. IT section 17(5) AB does not block ITC of goods in relation to motor vehicles, vessels, and aircraft. Therefore, ITC can be claimed for the tires which is purchased by the company. With this background, we'll go to the next clause, which is clause B. And it deals with various kinds of services. The first one being foods and beverages. We all know that this is a very much famous block credit. ITC of foods and beverages is a block credit. ITC of outdoor catering is also blocked. Beauty treatment is a block credit. ITC in relation to health services is a block credit, because it is deemed that health services are never for or in the course of business. Health services are always for individuals own use, and therefore ITC is blocked. The next one being cosmetic and plastic surgery, again not in the course or furtherance of business, and therefore block credit. Leasing, renting, or hiring of motor vehicle, vessels, and aircraft. Now, though in most of the cases when it is used by the company, it is in the course or furtherance of business, but somewhere government has this mindset that it is very difficult to establish that whether renting of this motor vehicle is used for business purposes or personal use, and thereby with this mindset they have blanketly blocked ITC of leasing, renting, or hiring of motor vehicles, vessels, and aircraft. The next one is life insurance and health insurance. Life and health insurance is again a block credit. Now there is a proviso in this particular clause, and it reads as, provided that the ITC shall be available where an inward supply is used for making an outward supply of same category of goods or services, or as an element of taxable composite or mixed supply. Now what this thereby means is that if I am into business of providing food and beverage, this thing. So if I am a trader in bottles of juices, then even though beverages is a block credit, because I am a trader in beverages, I am buying it and I am selling it, I am entitled to claim ITC. This proviso takes me out from this blocking. If it is used for making an outward supply of same category, then it is not a block credit. Going further, again, membership of a club is a block credit. Membership of health and fitness center is a block credit. And travel benefits, if any, extended to the employees on their vacation is a block credit. We have one more proviso to this particular clause, and it reads as, provided that the ITC in respect of goods, of such goods or services or both, shall be available where it is obligatory for an employer to provide to its employees under any law for the time being in force. So this proviso says that if any of the services you as a company are under obligation under any law to provide it to your employees, then it will not be a block credit. Now, what kind of situations are covered under this particular proviso, we will discuss in the couple of minutes. Let's try to take few examples and understand that which transactions are blocked, which services are blocked, and which are not blocked. The first example is a company is purchasing ready premix tea and coffee powder packets, which they are using it to for their customers and their guests, as well as their employees are also using it. Now, ready-made premix tea and coffee being in the nature of food and beverage, which is a block credit, ITC cannot be claimed. The next example is 20-liter bottle containers purchased by company for common use. That is, the water has been consumed by office staff as well as by their customers. We saw that food and beverages both are blocked. Water being a beverage, it's a block credit and therefore ITC cannot be claimed. Third example, business promotion expenditure incurred by company whereby top 100 customers are hosted for dinner at a hotel. Again, food and beverages is a block credit. Even though this dinner is for the customers, it is for the business promotion activity, but food and beverages being a block credit, ITC cannot be claimed. Next example is makeup and beauty treatment cost incurred by a model which was required for acting in a film. Now we all of us know that it is very essential for a model to get herself made up before shooting, and we know it's very essential for her to do that, for her to provide the services. But because beauty treatment is a block credit, ITC in this particular case cannot be claimed, even though these makeup services are used by model in her course or furtherance of business. Next example is motor car having sitting capacity of 5 passengers taken on lease for transportation of employees. We saw that leasing and renting and hiring of motor vehicle is a block credit and therefore ITC in this particular case cannot be claimed. Last example, motor car having sitting capacity of 5 passengers taken on hire for transportation of statutory auditor. Again, renting and hiring of motor vehicle is a block credit and therefore this ITC cannot be claimed. Membership taken by a company in club facilities of which is to be used and availed by top executive employees of the company. Again, this is a block credit. Membership of a club is a block credit. Membership of a workout studio having outlets across the city taken by a company, benefit of which is to be availed by employees. Again, we saw that fitness and health related services are a block credit and therefore this ITC will not be available. Employee group life and health insurance taken by the company. Life and health insurance is again a block credit and therefore this ITC cannot be claimed. Accident policy taken by the company for employees who travel regularly to offshore for business purposes. Now, all of you would know that accident policy is not a life or a health insurance policy. The blocking under section 17(5) is only for life and health insurances. Therefore, accident policy not being a life or a health insurance, ITC can be claimed. Last example, professional indemnity policy taken by partners of a partnership firm. Again, indemnity, professional indemnity policy not being a health or a life insurance policy, ITC can be claimed. Now, with this background, we'll discuss few examples on blockage of ITC for canteen services which are provided by employer to their employees. Now, in first case, employer has outsourced canteen services to a contractor who provides such services from premise of such establishment only. Now, in this particular example, the company is not under obligation. No other law obligates the company to provide this canteen services or mess services to their contractor. And therefore, as we saw that the proviso takes out services provided to employee only if they are obligatory under any law. In this case, because it is not obligatory under any law, ITC cannot be claimed. In next case, employer provides canteen services on its own accounts. That is not outsourced. So he is not hiring any contractor to cook the food. He is doing it on his own account. Now, in this case, again, because it is not obligatory for the company to provide canteen services to its employees, it is a block credit and ITC will not be available. Employer has outsourced canteen services to a contractor who provides such services from premise of such establishment only. Now, in this case, the employer is under the obligation to provide food to its employees and therefore ITC will be allowed to. Next case, employer provides canteen services on its own, that is not outsourced, if such facility is considered to be supply and output tax is charged. Now again, he is not under obligation to provide food, and therefore ITC will not be available. In last case, output tax is charged, and he is under obligation to provide the food to its employees, and therefore ITC will be available. So these were some examples in relation to clause 17.5p. The next clause which we'll be discussing is clause C, which deals with works contract service. And before going into this particular clause, let us quickly try to understand the definition of works contract service, which is defined in section 2, clause 119. And it reads as, works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration or commissioning of any immovable property wherein transfer of property in goods is involved in the execution of such contract. So there are two important things to note in the definition of works contract. First being, there should be transfer of property in goods. So works contract is a service. Along with service, there should be some transfer in property of goods at the time of providing works contract service. This is the first and foremost important condition. And second condition is that it should be in relation to an immovable property. Then only if both these conditions are satisfied, then only it will be treated as a works contract service. Now with this background of definition of works contract service, we will see how this clause C is worded. It says that if any works contract service is supplied for construction of an immovable property other than plant and machinery. So plant and machinery is an exception. Except it is input service for further supply of such works contract service. So any works contract service which is supplied for construction of an immovable property is a block credit, and there are two exceptions to it. First one is that if it's a plant and machinery, then it is not a block credit. If it is in relation to plant and machinery, it is not a block credit. And second is that if this works contract service is used as an input service for further supply as works contract service, then ITC can be claimed. So whereby a contractor is availing services of subcontractor, is providing services to subcontractor. So in that case, the subcontractor will be eligible to claim ITC because he is doing back-to-back transaction. Now we will discuss this clause C in detail in subsequent slides. Because C and D are somewhat related, first we'll read out both these provisions together, and then we will analyze both these clauses C and D in detail. Clause D deals with goods or services which are used for construction purposes. And this clause reads as, goods or services received by a taxable person for construction of an immovable property other than plant and machinery on his own account, even if used in the course or furtherance of business. So what this thereby means is that if any goods or services are received by a taxable person for constructing an immovable property, even if it is for its own use, and even if it is used in the course or furtherance of business, ITC will be blocked. And only exception to this clause is plant and machinery. So if these goods and services are used for plant and machinery, ITC will not be blocked. In all the other cases, ITC will be blocked. Now there are two explanations to this particular clause. Both these explanations are very important because these explanations, they define two terms. First, construction, and then plant and machinery. Let us quickly read out the definition of construction and plant and machinery as defined in explanation to section 17.5c. The term construction is defined to include reconstruction, renovation, additions, or alterations or repairs to the extent of capitalization to the said immovable property. And the term plant and machinery is defined to mean apparatus, equipment, and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and includes such foundation and structural support but excludes land, building, or any other civil structure. It excludes telecommunication towers, and it excludes pipeline laid outside the factory premises. So these are the definitions of construction and plant and machinery. With this background, if someone has to summarize clause C and clause D together, you need to check three conditions to come to an answer or to conclude whether the ITC is blocked or not. First, you need to check that whether the works contract service, goods or services are received and it shall result in creation of immovable property. If the answer is yes, then first condition is getting satisfied. Now the sub condition to it is that if it's a repairs work or a renovation work which is undertaken for an existing immovable property, and if the cost is capitalized to the said immovable property, then again this condition is getting satisfied. So you need to check this condition first. The second condition which you need to check is that whether the resultant creation of immovable property is used in the own for its own account for own use. And the third condition which you need to check is that immovable property should not result in plant and machinery as per the definition which we just saw. If these three conditions are getting cumulatively satisfied, then your ITC will be blocked. The first one being it should result in creation of immovable property. The second one being it should be used for the own account. And the third one being it does not result in an immovable, it is not for a plant and machinery. If these three conditions are getting satisfied cumulatively, then your ITC will be blocked. And with this background, let us try to understand implications for each of these transactions or activities. Now, say for example, a company is getting their office renovated. In that case, they are undertaking various kinds of jobs or various kinds of works from a contractor. Now, from company's perspective, which of the ITC will be available for the various jobs which are undertaken for renovation of office? Now, first work is building civil works. Now, civil works generally includes your walls, your ceilings, etc. Now, they being in the nature of immovable property, your first condition is not getting satisfied, and therefore your ITC will be blocked because it is resulting. Civil works are generally in relation to immovable property. ITC will be blocked. Plumbing works. Again, the nature of most of the plumbing work is in relation to immovable property only. All your pipes and everything is concealed and is fitted in such a manner that if you have to remove it, you have to cause a damage to that structure. Otherwise, we will not be in position to remove it. Therefore, they are said to be immovable, and therefore, for plumbing works also, ITC will not be available. Vitrified tile flooring. Again, flooring is an immovable property. You cannot remove flooring as it is. If you want to remove your flooring, you have to definitely damage it. Therefore, it is an immovable property. ITC will not be available. Luster paint on walls. Again, paint is an immovable property. You cannot remove paint from the wall, and therefore, it is a block credit. Fire protection work. Now, fire protection work generally which is carried out is not in relation to an immovable property. Some devices are fitted on the ceiling which can be easily removed. Your fire extinguishers and etc. which are fitted on the wall. You can very well remove the fire extinguisher from their wall and you can use it. So it is not in relation to an immovable property and therefore ITC can be claimed. Air conditioning work. AC is a plant and machinery. In your books of accounts also, when you are capitalizing this asset, you capitalize under the head of plant and machinery under the Income Tax Act. Therefore, air conditioning machinery being in the nature of plant and machinery, it is not a block credit and ITC can be claimed. Carpentry work, including tables, chairs, etc. Now, all your tables, chairs are movable items. They are not fixed to earth. Therefore, they being in the nature of movable property, ITC can be claimed. Land system, again, it is a movable item and therefore ITC can be claimed. Fire alarm system, again, I think it's got repeated, ITC can be claimed. All your electrical works, all your light fittings, etc., they can be easily removed and changed. Therefore, again, electrical ITC in relation to electrical works also can be claimed. Telephone systems also, it is a movable item, ITC can be claimed. Lightning protecting system, again, the device is in the movable nature and ITC can be claimed. Demolition work. Now in demolition, you are not creating any immovable property. In fact, you are breaking that immovable property. And therefore, by demolition work, you are not actually creating any immovable property. It is not satisfying the condition of section 17(5)(c) and D, and therefore ITC can be claimed of demolition work as well. Your CCTVs, TVs, HDMI, again all these are movable items and therefore ITC can be claimed. With this background, we'll move to clauses E, F, G, H and I. These are very simpler ones and most of us don't have very regular implications to these clauses, and therefore we'll quickly go through these clauses. Clause E deals with cases whereby if you are receiving any goods or services or both on which tax is paid under section 10 by the supplier of service, then ITC will not be available. What this thereby means is that if you are taking any services or goods from a composition dealer, even though he is paying tax as a composition dealer, you are not entitled to claim a credit of the GST which he is paying under composition scheme. Next one is goods or clause F. Goods or services are both received by a non-resident taxable person except on goods imported by him. So in this case also, a person who is getting himself registered as a non-resident taxable person, even though he is taking GST registration, he is paying tax on his output supplies, but he is not entitled to claim any ITC because of clause F. Except for the goods he is importing, he will be entitled to claim ITC on that. Apart from that, he will not be entitled to claim any ITC. Clause G deals with goods or services are both used for personal consumption. Now, frankly, if you ask me, I don't see a sense in including this clause because section 16, which is a basic section for claiming ITC, it itself says that ITC can be claimed only if the goods or services are used in the course or furtherance of business. Therefore, this doubt of claiming ITC on personal use items is already removed from section 16 itself. Therefore, ideally, there was no requirement for this clause G. However, to eliminate any doubts and to ensure that no one is claiming ITC on personal consumption items, ITC is specifically blocked for clause G as well. Clause H deals with ITC in relation to goods which are lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. We will understand this clause with the help of few examples in subsequent slide. And the last clause is clause I, which deals with any tax in accordance with provisions of section 74, 129 and 130. So if there is a notice issued by the department and if you are paying any tax under section 74 or 129 or 130, even though you are paying tax, you will not be entitled to claim ITC because it is specifically blocked. With this background, we will try to understand these clauses with the help of few examples. So a recipient has purchased goods from a composition dealer. Can he claim ITC? No, because this clause E specifically restricts and therefore ITC will not be available. Next example, goods lost during transportation in the normal course, whereby the chemical which was transported tends to get evaporated in the process. Now let me take you back to this slide. And clause H deals with goods lost, and goods which are lost is a block credit. Now in this case, if you refer to the example, a taxpayer is transporting chemical which tends to evaporate. Now there are certain kinds of chemicals which tend to evaporate if certain kind of air pressure is not maintained. During transportation, some quantities tend to evaporate. Now in this case, because the goods are lost in normal course and it is not an abnormal course, ITC can very well be claimed. And this position is confirmed by Madras High Court in the case of R steels and alloys. They have said that goods which are lost in the normal course, ITC is not be required to be reversed. Next example is goods lost during transportation in the abnormal course, whereby the driver of the truck met with an accident and all the goods were completely destroyed. So this is not a normal scenario. This is not a case whereby a chemical is getting evaporated. This is a case whereby the driver met with an accident and therefore all the goods lost in the transportation. In this case, the recipient of goods is required to reverse ITC. Next example, crockery sets purchased by company to be distributed to employees during Diwali. So again, we know that goods given as gifts by way of gifts or free samples again is a block credit. Therefore, this Gift items, even though given to employees, it will be a block credit. Pen sets purchased by company to be distributed to its top 100 customers on occasion of 50th anniversary of the company. Now, again, even though this gift is given to the customers of the company, it is in the course of business. Because there is business, there are customers, and therefore you are giving this gift. Despite of all these facts, you will not be entitled to claim ITC because goods given away as gift is a block credit, and therefore ITC will not be available. Let us take few more examples on goods lost. First example is raw material A purchased by a dealer for manufacturing finished product X. So a manufacturer of a product, he is purchasing various raw materials, and by processing those raw materials, he is manufacturing a finished product X. Now, when this particular raw material A was being transported in transit, it got lost due to road accident. Now, in this case, can ITC of raw material be claimed which was lost in transit? The answer is no, because the raw material A was destroyed as it is. Before this raw material A was being put in the process to manufacture finished goods X, it was destroyed before that only, and therefore ITC cannot be claimed. Now, let us take one more example which is different from the first one. Raw material A purchased by dealer for manufacturing product X, which was manufactured. So raw material A, B, C was purchased and a finished product X was manufactured. Now later this finished product X got damaged in factory due to heavy rains. Now in this case, can ITC of raw material A be claimed by the manufacturer? Please understand the difference over here. Right now in this example, your raw material A is already converted into some other product. It is processed and it has resulted into a new product which is product X. And now the product which is getting damaged is product X. So the question is, the ITC which I have availed at the time of purchase of raw material A, am I required to reverse that ITC because I have already used it? The answer is no. Because if you refer to the clause, it says goods lost. Now, what do you mean by goods lost? Goods lost as such. Goods lost as such. In the first example which we saw, raw material A was getting damaged or getting destroyed as such. While raw material A was put in the process, before it was put in the process, it got lost in transit, and therefore it was lost as such, and ITC was not available. But in the second example which we are referring to, raw material A is already processed, it is put to use, it is already transformed to some other product which is product X, and then when this product X is getting destroyed, I am not required to go back and reverse ITC of raw material A. So this goods lost term has to be read goods lost as such. I hope I could explain you the difference between goods lost as such and goods lost in transit. With this background, I think I have covered all the clauses of section 17(5) of CGST Act, which deals with block credit. And now we'll open the session for discussion, and if participants have any questions, we can take them up. You may raise your hands and we will unmute you. If you have any questions, please raise your hands. If you want to discuss any other transactions or any other goods or services which you are using in your daily business activities, if you have any questions, we can discuss them. Aman, Raj has a question. Can you unmute him? Aman? Just a minute. Raj, just a minute. Aman will. Praveen, you have put a question on chat box that whether ITC on MIDC lease line transfer fees can be claimed. So I think this is a very complex question, and we have already discussed this through series of emails. I think we'll have to discuss this question offline. because this requires a lot of facts to be put forth, and then only we can discuss this. So I'll take up this question with you separately offline. Aman? Sorry for this glitch. Aman is trying to resolve it. Just give us a minute. अरे अमन unmute करना. Unmute करना. Raj, I think Aman has unmuted you. Can you? Okay, so I think.
Hi, Yash.
Yes.
Hello.
Yeah, I got
yes.
a question. You have posted on chat box
Yeah.
that ITC on hotel room booking, including breakfast, when not charged separately. So I understand what your question is. So basically, just for the benefit of other participants, let me just elaborate this facts. So what happens is that in hotels, whenever you are taking any accommodation service, there are various kinds of packages which they offer. And the most common package is a CP plan, complimentary plan, whereby the hotel gives you complimentary breakfast along with the accommodation service. Now, this being a composite supply and principal supply being accommodation service, hotel on their invoice, they levy charge only for the accommodation. They don't give breakup of accommodation and breakfast, F&B separately. And therefore, when hotel itself is not having two separate charges for accommodation and breakfast, you can very well claim ITC of the GST which is charged by the hotel. Raj, I hope I could answer your question.
Yeah. Okay, Sam, like when we do the business activity on the sales promotion, they are packaged like 1,000 rupees per plate with accommodation or other like rent and included in this package. Then
I did not understand your question.
When we 100 persons are there in the business meeting, they fix the charges of 1,000 rupees per guest, like a plate and guest. But they're including rent of the hall,
invoice, basically they are charging you for F&B 1,000 rupees, which includes everything.
Yes.
Correct. Now, this 100 guests whom you have invited, are you going to charge them? Are they your guests or are they your customers to whom you are going to
charge? We not charge our customer because this meeting for the dealer, distributor, and all that. In
so
that case,
you are not going to raise any invoice on them for attending this event, right?
No.
So this being specifically F&B invoice, ITC will not be available.
Okay, so we should take the separate bill for the rent and all that. So we can take
proviso which is there in section 17(5)(b) does not take you out of this situation, and therefore ITC will be blocked.
Okay, and in some cases, we have some business promotion material which we get from the suppliers for 100 rupees and we sell to the customer on 50 rupees. In this case, how we segregate ITC claim or not?
Can you repeat your question?
Yeah, one we take some promotion material from the supplier of 100 rupees and we distribute it to our customer at 50%. 50 rupees we charge to customer. In that case, ITC will claim on 100 rupees or take on 50?
Claim on 100 rupees. There is no problem.
Because we are selling the customer on 50 rupees, like a 50% discount.
That is your call. That the loss you are taking on your account. Okay. This thereby does not mean that it is a kind of a discount which you are giving. So you are entitled to claim credit. There is no problem.
Okay.
Yeah. Do we have any other questions? Please raise your hands so that we can unmute you and you can ask your questions. Okay. Aman, I think there are no more raise of hands. Please raise your hands if you have any questions. Otherwise, we'll close the session.
Yes, there is one query on chat box.
Okay. Can you unmute Mr. I think Rakesh Kumar has sent a query. Can you unmute him so that I can understand his query? Aman, can you unmute Mr. Rakesh Kumar?
So Mr. Rakesh can unmute by itself.
Hello, good evening, sir.
Yeah, good evening.
Sir, actually, we have one tractor which is higher at our CFS area.
Okay.
Now, it is provided by a service provider for removing garbage.
Hmm.
So, should we have to pay RCM on that, or no need to pay RCM, and can be ITC availed, or what?
Sir, so I'll answer your question on ITC. If you refer to section 17.5A, which we discussed, the ITC is blocked only of motor vehicles which are used for transportation of passengers.
Okay.
As I understand, tractor is never used for transportation of passengers.
Correct.
Then you don't fit in 17.5A only, sir, to start with. And
Okay.
therefore, this question of block credit should not. Hope I could answer your question.
Yes.
I would request participants to restrict their questions only on block credits, because currently we are having a session on block credits. We have separate sessions on RCM where my other partners will take you provisions of RCM. If you have any more questions, please raise your hands. I think, Aman, we can close the session because we don't have any more raise of hands. Thank you so much, everyone, for your patient hearing. And if you have any further doubts, you can email it to us and we'll try to address your queries to the best of our abilities. Thank you, everyone.